Hey guys, it is Julie here with JT Wealth. In today's video, we're taking a look at 3 strong buy stocks recently added to billionaire Ray Dalio's investment fund. So let's get into it. All right, guys, welcome back. Happy Monday. Thank you so much for being here. Like I said, today we are taking a look at what 3 strong buy stocks billionaire Ray Dalio recently purchased. These 3 stocks were recently added to Ray's hedge fund, Bridgewater Associates, which he founded back in 1975 after getting his start working on the floor of the New York Stock Exchange trading commodity futures. With the firm managing about $140 billion in global investments and Dalio's own net worth coming in at $17 billion, he has earned guru-like status. In today's video, we're going to take a look at what exactly these 3 companies do, plus what ratings analysts give them and price targets for their future. And just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in our description, which includes, of course, my favorite resource, Tip Ranks. Their free plan has a ton of great information, but the premium and ultimate plans come with some really amazing tools. So if you're thinking of signing up, make sure you use that link down below to let them know I sent you. One last thing before we get into these is that some of these companies aren't exactly the cheapest stocks on the market, so I just want to remind you all that fractional shares are available at a lot of brokers nowadays, so don't feel obliged to ever purchase an entire share. You can do half a share or a tenth of a share, whatever fits your investment best. Okay, with that being said, the first company we're taking a look at is BlackRock. They trade under the ticker BLK and closed last Friday at about $710 per share and are currently down a few dollars in the pre-market, sitting around $707. Now, BlackRock comes in as a strong buy based on 6 analyst buy ratings and 1 hold. The average price target is $832 for about a 17% potential upside over the next year. And those ratings are all quite recent, being within the last month. The most recent came 4 days ago from the Deutsche Bank at a price target of $837 for just shy of an 18% potential upside. Our highest price target is $890 from Morgan Stanley for over a 25% potential growth. And on top of that growth potential, BlackRock also pays a dividend. That dividend equates to $4.13 quarterly for a yield of 2.33%, with our next ex-dividend date coming up on March 4th for payment on March 23rd. Now, the name BlackRock probably rings some bells as they are a fairly well-known asset manager. BlackRock has been operating in the U.S., managing assets for U.S. clients for more than 32 years. They have over 7,500 employees, and over 100,000 U.S. financial advisors have chosen BlackRock to help build their client portfolios. Most recently from BlackRock, and amid this world pandemic, we've heard from them on a new investment order, saying that they have changed their asset class views in light of the prospect of additional U.S. fiscal support, climbing inflation expectations, and rising U.S. Treasury yields. Their 2021 investment themes include the new nominal, where they see a more muted response of government bond yields to stronger growth and higher inflation than in the past, as central banks lean against any sharp yield raises. They say that they favor inflation-linked bonds amid inflationary pressures in the medium term. Globalization rewired, as the coronavirus has accelerated geopolitical transformations such as a bipolar US-China world order and a rewiring of global supply chains, placing greater weight on resilience. So they favor deliberate country diversification and above benchmark China exposure. And turbocharged transformation, as the pandemic has added fuel to pre-existing structural trends such as an increased focus on sustainability, rising inequality within and across nations, and the dominance of e-commerce at the expense of traditional retail. So they prefer sustainable assets amid a growing societal preference for sustainability. Now, BlackRock is actually the world's largest asset manager, with over $8.67 trillion in assets under management. Last year, they saw revenue of over $16 billion, and their net income came in at nearly $5 billion. So Dalio's fund recently started a new position in the BLK stock, and that position totaled $14 million. The second company that we're taking a closer look at is Lind. Trading under the ticker LIN, they closed Friday at around $250 per share. It also comes in as a strong buy, based on 15 buy ratings and 3 holds. The average price target is $295 for nearly an 18% potential upside. And most of those ratings are quite new and all within this last month. The most recent came last week with a $300 price target for just about a 20% potential upside. And our highest price target comes from a 5-star analyst at the Deutsche Bank at $333.66 per share for about a 33% potential upside. And as an added bonus, Lind also pays a dividend. That dividend is $1.06 quarterly for a yield of 1.69%, with our next ex-dividend date coming up on March 4th for a payment date of March 22nd. Lind is a leading global industrial gases and engineering company with 2020 sales of about $27 billion. They live their mission of making the world more productive every day by providing high-quality solutions, technologies, and services which are making our customers more successful and helping to sustain and protect our planet. Lind is the world's largest industrial gas production company, whether counting by revenues or market share. Lind produces a range of gases for industrial use and is the dominant supplier of argon, nitrogen, oxygen, and hydrogen, along with niche gases like carbon dioxide for the soft drink industry. The company also produces gas storage and transfer equipment, welding equipment, and refrigerants. They are focused on sustainable development targets between 2018 and 2028, including climate change, where they are investing over $1 billion in decarbonization initiatives, and about a third of their annual R&D budget to that decarbonization. One analyst covering the stock for BMO is John McNulty. And he says that Lind continues to execute on its growth strategy to drive solid double-digit earnings growth, notably without requiring a further macro improvement. In our view, management's 11 to 13% guide for 2021 remains conservative, driven by its oncoming projects, continued pricing, efficiency gains, and solid buybacks with its strong balance sheet and cash flows. We believe Lind is poised to continue to surprise investors and outperform the broader group, even in a cyclical market, the largest global industrial gas company. Dalio's fund purchased over 20,000 shares of Lind, totaling about $5 million. And the third company is actually one that I hold in my JT Wealth dividend portfolio, and that is ABBV. Trading under the ticker ABBV, they closed Friday at about $105 per share. They also come in as a strong buy based on 9 analyst buy ratings and just 1 hold. The average price target is $122.60 for just shy of a 17% potential upside. Now, some of those ratings are getting a little bit older at that 3-month mark, but we do have some more recent ones, with the most recent coming in at $116 from 11 days ago, and our highest price target is $140 for about a 33% potential upside. And as I mentioned, they are in my dividend-focused portfolio, so of course, ABBV pays a dividend. And that is for $1.30 quarterly for a dividend yield of 4.95%. Our next ex-dividend date is on April 14th for a payment on May 14th. ABBV is an innovation-driven, patient-focused specialty biopharmaceutical company capable of achieving sustainable top-tier performance through outstanding execution and consistent stream of innovative new medicines. They hold a strong leadership position in attractive growth markets such as immunology, hematologic oncology, neuroscience, and allergen aesthetics. Looking to the future, they expect a continued strong top-line growth leading up to the U.S. Humira LOE, or loss of exclusivity event, in 2023. They do expect total company sales to decline in 2023 following that LOE, but quickly returning to growth in 2024. And then they expect rapid return to strong top-line growth in 2025 with high single-digit compound annual growth rates through the remainder of the decade. They have consistently delivered top-tier performance with a 13.5% adjusted net revenue compound annual growth rate from 2013 to 2022. And since their inception in 2013, they've delivered top-tier shareholder return at 342%. Now, when looking at a biopharma company, I always love to look at their pipeline and see what is coming up next. But with ABBV, there is simply way too much to go through. And you can see they have a lot of things in their pipeline at various stages, including a long list in that phase 3 studies. Dalio's firm recently purchased about 25,000 shares of ABBV, worth about $2.66 million. So there we have 3 strong buy stocks recently purchased by Ray Dalio's hedge fund. And yes, I understand in that sea of billions of dollars under management by his fund that these positions aren't exactly large, but they still look like some great opportunities with solid dividends and potential for great growth in the future. Keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes to bring some new companies to your radar that you can then go and do further research and due diligence on before making any investment decision. On that note, you guys know I always love hearing from you. So let me know your thoughts on these 3 companies. Are they ones that you already hold? And what do you think about their growth potential? If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day and cheers.